Indeed. I think reading too much into the yield curve is going to be a mistake at this point. It's really not the shape of the curve that matters as much as rates. And one proof point in that regard is just look at housing. And housing data came out today. Single-family homes, they were doing pretty well. When was the last time when the curve was inverting and the Fed was tightening, you saw that? So I think a combination of low level of rates, the Fed on an easing path, to some extent, negates whatever we could have read out of the flattening of the curve.
All right, Ron, let me bring you in, and let's get beyond the idea of the flattening of the yield curve and into some of the, Krishna's right about the housing numbers that came out today.
Well, it was about today's housing numbers. Last week's housing numbers.
Last week's and last month's were not so good.
Yeah.
But let's talk about manufacturing.
Yeah.
Both in the U.S. and Europe, signaling a significant slowdown.
Yeah,
the European numbers, as low, a big a drop as what, in 6 years, something like that.
And you've got China still weakening. You've got the president threatening to hold tariffs on, even if we get a trade deal with China. And then you also have the possibility that the UK crashes out of the European Union by mid-April. To me, it's starting to look like a 1997-style event, like the Asian currency crisis, where you have external pressures that have forced the Fed to alter their plans with respect to interest rates. You have something of a domestic slowdown, which is not nearly as bad as the rest of the world, but you do have risks rising everywhere else, and that does create a negative feedback loop. So I think the Fed is right to pause. The yield curve, it's a little strange because when Powell held his news conference earlier this week, and I don't want to get too far into the weeds, but they said they were going to reinvest the proceeds now, which is effectively a stealth quantitative easing, and that's bringing long rates down because the Fed's going to start buying again, and so you have a demand side pull on interest rates coming down as opposed to the Fed pushing short rates up above long rates.